This is interesting what's happening here. If you're looking at the 4-hourly time frame, we got this swing here. I pulled Fibonacci from this last swing, and what I'm seeing is, first off, yeah, we've definitely been in the sweet spot, ranging a little bit here, but we broke out from the sweet spot, these yellow lines. But then what happened? So we above the 20-day EMA on the 4-hourly time frame and resting on it as support confluently with the 50% Fibonacci retracement. So we got a strong support here. We got very strong support here. Yeah, that's the support. And as you guys see also, while we got the support, we are squeezed between the 20-day and the 20-day EMA. So it's going to break out in either direction, either down or up. Now the question is, why would it want to break out up? Let's do like this. Let's mark out this zone so we know where the sweet spot is. We don't want to have too many lines on the chart because it can easily become confusing. So now let's Alright, so the thing is like this. I would want to see this market break up to the above. Breakout up. Why is that? Well, we're going to look at it. This is what I want to see. Alright, why is that? It's because here it's a lot of liquidity. Here you got a lot of liquidity, a lot of unfilled orders that needs to get filled. This here, this white gray zone is definitely a liquidity zone, and it's confluent with the top of the sweet spot zone, so the 61.8 Fibonacci retracement. So I could easily see gold come up to, and it's confluent with the 1900 price level, 1900. Not only gold, but basically all currency pairs likes even numbers and tends to respect it as resistance or support. Why is that? It's because a lot of people put their stop losses or buy limits or sell stops there. So I can easily see this is definitely a target. And the 1900 is definitely a target for us, for a buy, for potential buy. And that buy would go from this area here. Where we're at right now, actually. But before we do that, we need to see a breakout from these two EMAs. So it will be either here, or if it breaks down below, then then we have to start looking for a sell. We would never look for a buy if market breaks down underneath the 20-day EMA on the 4-hourly time frame. We would never look for a buy there. We would look for a sell. for it to become a buy opportunity again, we have to see the market be above the 20-day EMA, this yellow line. So now what we're looking at is if the market breaks out above the 200-day EMA, that's what we want to see. If it does so, we have a potential buy here. So let's see if we get some volume in the market, we get something moving, because right now ain't much happening. Same case like yesterday, markets are slow. Yeah. Yeah, I see the same thing here. We got a 20-day EMA acting as resistance, pushing the market down. Let's see how this holds. Yeah, and what direction it's going to run. And same thing here. It breaks out either above or below, and we're looking at gold. Basically, same thing. No trade range. Breaks out above or below. Let's see if any of that happens before the U.S. market opens and before Jerome Powell testifies in the banking committee